I do believe it will decouple in times of extreme stress on the equity markets. And we saw that a bit. I've talked to a lot of different like crypto fund people in recent days. They're all kind of flocking back to Bitcoin as they see it hitting its floor. All these other coins, all these other projects, all this nonsense, there is no floor. There is no floor. But Bitcoin has clearly demonstrated it is a safe haven.
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey, Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury company. We're back this week, of course, with Chase Palmieri, my co-founder and CEO of Acropolis, joined in the studio by Dan Hillery. Dan has been on the show already, so we'll skip the intros, but excited to have you back on the show, Dan.
Hey guys, thanks for having me. This is exciting time in Bitcoin. And I mean, you guys are set up, positioned to really take advantage of what I think we'll see over the next 9 months.
Yeah, I think the last time we chatted was probably end of Q3 or Q4 of last year. So there's been a lot of developments in Bitcoin and MicroStrategy, Acropolis, of course. But right off the bat, let's talk about you and the MSTR True North crew having your own room at Strategy World in Orlando this year. You're chatting on stage with Michael Saylor and CEO Phong Le. Why do you think Michael Saylor is finally acknowledging you guys? You know, what's actually changed?
I think he probably had a lot of conversations with his lawyers and his legal team and decided it was okay for them to be interacting with us, because I think that is really like dicey territory for them. And, you know, we are free marketing. We're just kind of fanboys. And I think it's advantageous for MicroStrategy and that retail investor base in the modern world with, you know, information traveling at the speed of light. I think it's valuable. I think it's really valuable for a company, especially a company whose equity is the product. So I see why he'd want us around. I'm still not sure why he's allowed to have us around, but I'm excited to be there regardless.
Yeah, and I'm excited to see him kind of giving you guys the credit you all deserve. So
Appreciate
I want to
that.
start. Yeah, of course. I want to start with maybe some Bitcoin philosophical, high-level thoughts, questions before we dive into all of the really nuanced details around MSTR's strategy and tapping capital markets, etc. So I've heard you say that owning Bitcoin and MSTR is really just a trade for you, that it's kind of the fastest, surest path that you see to getting rich and building wealth, and that you're not necessarily on a mission in maybe the same way that a Bitcoin maxi would identify themselves as being on a mission. So I'm just curious if you can maybe elaborate on how you think about that.
Sure. I do believe, much like Josh Mandel and or Josh Mandel's philosophy, that Bitcoin is kind of life, like Bitcoin is. So I am philosophical about it. I do believe it is kind of our energy, our stored energy and our lifeblood, and could be an avenue towards kind of universal basic income. I do think everyone has a right to sort of owning assets, and Bitcoin allows that distributed kind of index of global productivity to be shared amongst human beings. So I believe it's valuable. But I also don't like to get lost in sort of the in the philosophy when I'm trying to, you know, make trades. And if you're holding a call option, or you're selling a call option, or you're doing this, that, and the next thing with leverage, I mean, you are a trader. So I am a trader. And if you lose that kind of edge, then you won't perform to your best ability and you'll make mistakes. And I've found myself a lot of times being too idyllic about Bitcoin and then getting burned with regards to trading. And so right now, at this point in my life, I need to draw a hard line and say, I am a trader. I won't be idyllic about Bitcoin in the short term. And that's how I've decided to play it. But that's more of an emotional thing than it is a mental thing for me, than it is kind of my stance on Bitcoin, which I do believe is a revolution in terms of, you know, human well-being.
So even with Bitcoin's price rising, should we not be surprised if MicroStrategy makes bigger and bigger buys in Bitcoin terms, since they're raising capital faster than Bitcoin's price is appreciating?
Yeah, I think that's a really good one. If you look back at their purchase history, over last summer. So when we were chopping between it was like 58K Bitcoin and 70K Bitcoin for that whole summer, they were very, very dormant in terms of their Bitcoin acquisition. And we didn't see that start to ramp up when they increased their outstanding share float in just 1 month during October. So the number of outstanding shares, sorry, it was actually November, but the number of outstanding shares they had increased by 25% in November with their ATM usage. And that, almost between September and November, they almost doubled the number of Bitcoins they owned with those purchases. So it's one of those things which is a gradually then suddenly. So I think the dormant time has been over the past few months. And as Bitcoin's price begins to rise, it will attract volume and interest in the Class A shares, which allows the ATM to be used, and then interest in the fixed income markets. And that's something people don't talk about enough. So I'm not sure where interest rates are going. I think they're going lower, but I don't know how much lower. If they do go lower, their preferred shares products will be extremely appealing to fixed income investors. If that's the case, there should be more volume for STRK and STRF, these dividend fixed income preferred stocks. And if that's the case, they'll be able to really go into those markets and use that capital to raise money. So I think something really exciting down the line is, what if we don't need Bitcoin's price to aggressively appreciate for MicroStrategy to have an aggressive ATM program? What if we need interest rates to come down, financial conditions to be easing for MicroStrategy to be able to aggressively sell at the market shares? And I mean, that would just be really, really cool to see, I think.
Yeah, what you're getting at there is that the coupon on STRK and STRF gets incrementally more attractive to fixed income investors as interest rates drop, because they're stating this kind of promised rate that depending on where the share price is, almost like 12% annual coupon, depending on your entry point. But to Mason's last question, this one, I do want to kind of double tap this, because I find it really interesting, because it seems to me one of these thoughts that even people like yourself and MSTR True North gang, and even me originally, we have this way of thinking that, as Bitcoin's price runs away, it's going to be harder and harder for MSTR to grab more Bitcoin in Bitcoin terms. Like their stacking is going to be, fewer in number of Bitcoin acquired each week, each month, etc. But I'm not sure that that's actually the case, because if they still have a premium, and if Bitcoin's price appreciating is either expanding the premium or bringing more liquidity into the options market and into the stock itself, then they can continue raising capital to acquire Bitcoin at a faster clip than Bitcoin's appreciation, which should translate into bigger and bigger bags of Bitcoin as we move forward, until theoretically the entire $300 trillion, bond market is tapped. So, I mean, just like asking you again, are we sure that as Bitcoin's price runs away, it's going to be harder for them to stack in Bitcoin terms, or does it actually get easier and easier? Because I think many of us looking on would say, wow, we didn't expect them to be at the number they're at now. And that's almost a result of the fact that they, as the machine, this engine of volatility that Saylor's building through the financial engineering, that they are actually grabbing more Bitcoin per week, per month.
Yeah, I think that's a really, I see what you're asking now, and I don't have a great answer. I do know that their convertible bonds outstanding right now make up about 1.7% of the entire worldwide convertible bond market. So there's plenty of room for that to continue to grow. And it's much like a population. There seems, populations grow exponentially until there's some sort of carrying capacity. And my understanding is we're nowhere near that carrying capacity in terms of both convertible bonds, preferred stock, and Class A usage. So to your point, that would mean MSTR could, in theory, continue exponentially increasing the number of Bitcoins they own relative to their market cap. So exponentially increasing their market cap. And I guess we'll see exactly how that plays out until they hit a carrying capacity. And some people argue they are at the carrying capacity, right? A lot of the bears will say there's no demand in the market for whatever it may be, the Class A, the preferred, or the converts. And as we know, they go out to the market when there is demand. And so I think things have been kind of slow over the past few months. But there's been historic periods of time when, demand comes and goes. It's much like anything. And we'll see that ramp back up. And to your point, that may allow a window for Bitcoin acquisition that is exponential, meaning that they may increase their BTC stack by 25%, 30%, 40% this year. Numbers that we wouldn't, numbers that if you think it's a decreasing exponential, you wouldn't assume or you wouldn't figure.
And do you consider every Bitcoin acquired by MicroStrategy to essentially be burned from supply forever because of their stated promise to never sell the Bitcoin? Or is that not really the right way to think about it, because in the future they might monetize it in a way, generate yield, lend it out, and in a way that Bitcoin is still should be considered part of the supply?
That's a really good question. I've never thought about it like that. I always thought, I know Josh, he was on a space once, and he mentioned that Bitcoin is very centralized in the hands of very few holders. And when you look at MicroStrategy, right, they're essentially taking in new Bitcoin, as you said, and now it will never leave that company, that corporate structure. And what that allows is sort of a more diversified holder group to emerge in terms of MicroStrategy shares. So it's almost decentralizing Bitcoin for those who were kind of later to the game, which is an interesting way to think about it. I think they will monetize their stack most definitely. That begs a larger question, in my opinion. Are derivative products increasing the supply of Bitcoin in a way and allowing people to make a second layer bet? And does that increase kind of the Bitcoin supply or the in terms of like price? Like if there's a bigger derivatives market to bet on Bitcoin, if there's paper Bitcoin and all these different different avenues or these different paper Bitcoin offerings, whether that be IBIT options or IBIT itself, whether or not you believe it's paper Bitcoin, then does that apply downward pressure on Bitcoin? I'm not sure.
Yeah, that's a really interesting point. And we're going to get into more of that when we talk about Misty and the income funds later in the chat. But it is interesting to think, some people think, okay, buying Misty is like buying Bitcoin because you're getting the performance of Bitcoin to some degree, because you're getting part of the performance of MSTR, which is levered Bitcoin. So you're kind of keeping pace with Bitcoin. So it's like owning Bitcoin, but with a dividend. But obviously that money is not necessarily translating into more Bitcoin. You could say through the option market, it makes its way into MSTR, and then MSTR makes its way into Bitcoin. So yeah, it's a really interesting question there about whether these derivatives, I guess the ones through MicroStrategy, you can feel pretty confident they're going to translate into more Bitcoin in real terms, but that's an interesting question. So one other thing that I think is interesting is a lot of people are like, hey, Saylor, why aren't you being more transparent about when you're going to tap the ATM versus STRK versus STRF, and which lever you're going to pull and how hard and when? But I was hoping that maybe you could suss out for us the reason that it's actually strategically imperative for them to surprise the market when tapping these different vehicles.
That's interesting. I've never thought of it as strategically imperative, but I think you're making a really good point that it is. I've always thought of it as more opportunistic, but similarly, like there could be. Well, we look at the offerings of convertible notes, right? Those convertible notes come with a pricing period during which the price is set for the Class A shares for the 55 or 50% conversion premium, right? So like that conversion premium will be a percentage above the current trading price, and that current trading price is set during a known period of time in the offering itself. So during those pricing periods, there's notoriously a lot of short selling in the market, with these big players wanting to suppress the price to get the best conversion price they can for these convertible notes. And so I think if they were more transparent with exactly how their convertible notes were going to be offered, when and on which days far out into the future, there could be a lot of shenanigans that go on in terms of pricing and how these big players manipulate the stock. So to your point, that's a really kind of scary thing, and they got to keep that close to their cuff. Now, in terms of Class A, I think the executive team at MicroStrategy mentioned something about, we're a business intelligence software company. Like, don't think we're just like going out and randomly, selecting sell in terms of at the market ATM. They're not going out on their computer clicking sell, sell, sell more shares. They have, sophisticated volume dependent algorithms set up through prime brokerage houses that sell these shares into the market with as little sell pressure as possible. And so it's going on throughout the day, every day, based on kind of demand and how their equity is performing. So I think it's an ongoing task that they're doing, and it's not as kind of just like dead simple as people want it to be. For example, during November, we were seeing kind of 7% of the, around 4 to 7% of the weekly traded volume of Class A shares sold into the market in terms of ATM usage. That was just because there was so much demand for those shares, right? The price was running up. Whereas last week, they sold about 0.7% of the weekly volume of Class A shares. So he was very, very subtle. I shouldn't say he, I should say the entire system, the algorithm was very subtle with the amount of shares they were selling into the market, just because that crazy euphoric buy pressure isn't yet on the equity, which I think it will come.
Definitely coming. The euphoria will definitely be here in maybe 6 to 12 months. But so when it comes to MSTR, between the two of us, Chase and I'm much more of the layman. Chase is much more into the weeds. So my point of saying that is I hear more of the general public opinion when it comes to my opinion on MSTR. And I know that I've heard Tim and others talk about Saylor wanting to go after 1% of the $300 trillion bond market pool of capital. And I also hear a lot about MicroStrategy potentially entering into the S&P 500 and how bullish that would be for the equity itself. But with that, wouldn't a AAA credit rating be more bullish than S&P inclusion, given the goals around the bond market?
I think absolutely. And I'm not an expert with regards to those ratings, so I don't want to speak too highly of it. But I think, or I don't want to speak too much on it, but I do want to say kind of what is the bet you're making when you buy a fixed income product from MSTR? And I think it's really interesting, and it's going to be part of the sales pitch to kind of these family offices and big fixed income investors. Okay, let's say I believe that Bitcoin is a $2 trillion asset class and no $2 trillion asset has ever gone extinct, right? Has gone to zero. Okay, but I don't know if it's going up or not. I don't know if Bitcoin's going to go up. Maybe I think Bitcoin may go trade sideways or go down, right? You can effectively make that bet via these fixed income products. So it's like, okay, I don't think Bitcoin's necessarily going to keep compounding at 30% annually, but I don't think it's going away. I want a high coupon. Oh, we're going to get this super high coupon that's collateralized by a $2 trillion asset that probably most definitely won't go to zero. Okay, these preferred offerings are your cup of tea. So you believe Bitcoin's here to stay. You don't believe it's necessarily going up. That strike or strife offering is your bet. That's what you want. And so I do think a AAA credit rating would kind of reinforce that sentiment. It would be like, okay, Bitcoin is pristine collateral. It can back these sorts of dividend payments. You no longer are betting on Bitcoin directionally. You're just betting on it being here to stay. And some sort of, as you say, confirmation from traditional credit rating agencies would usher that process along with very quickly.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin Treasury strategy. We're the experts your business needs. Acropolis offers trusted Bitcoin advisory. We provide you with an outsourced Bitcoin strategy officer, world-class research, and a creative financing team, and more, so you can navigate Bitcoin's market with confidence and acumen. Best-in-class custody with multi-institution custody. Eliminate the risk of loss while maintaining full control of real Bitcoin. Acropolis exclusively uses multi-institution custody as the safest and easiest way for businesses to hold Bitcoin. Bitcoin-only solutions. The Acropolis platform is designed for businesses of all sizes to seamlessly manage their Bitcoin treasury, and we focus solely on Bitcoin to offer you the most specialized services available. Adding Bitcoin to your balance sheet is just the beginning. With Acropolis, you're not just adopting Bitcoin, you're mastering its strategic use to create and maintain value for generations. Take the first step and start your corporate Bitcoin journey with Acropolis. Book your free consultation today at acropolistreasury.com/book and start implementing our proven strategies within days.
Yeah, and if you think about what Saylor's goal or optionality into the future with the businesses to kind of become the Bitcoin collateralized entry point to this new economy, then having the best possible rating, which obviously Bitcoin, we agree Bitcoin is pristine collateral. We all agree that it's headed that direction, but that does seem like a more bullish, especially long-term outcome than just S&P inclusion, which obviously, yes, there will be the one-time rush in of flow and then the ongoing passive funds. And now everybody and your mother will own some MSTR and therefore some Bitcoin. And so in a way, it makes everybody team Bitcoin almost overnight because, incentives are aligning. But yeah, I agree. I think AAA rating for MSTR's debt and all their different vehicles is way more bullish and doesn't get talked about enough. So here's another heady question for you here. This is one that I've been chewing on a lot, and maybe I'll take credit for it because I haven't heard anybody else say this yet. And so you let me know if you've heard this before because you would have. If MicroStrategy is accreting Bitcoin and Bitcoin is the new form of money, and they are doing it better than anyone else, like accreting Bitcoin in Bitcoin terms, then isn't MicroStrategy the new money printer? And therefore, aren't common stock shareholders the new beneficiaries of the Cantillon effect by sitting closest to the money printer?
That's really well put. Yeah, I think that's really, really well put. I've heard that attempted to be explained by like an arbitrage of the traditional capital markets and Bitcoin, and I don't think it says it as well as you're saying it. I mean, I think, yeah, all I have to say is yes. Yeah, I think
Okay,
you're absolutely right. But that also begs the next question, right? Like, if Bitcoin's the money and MicroStrategy is acquiring the money at the fastest rate of any company on earth, okay, then it's the most, then it's the most profitable company ever in existence. So there are a lot of routes you can take that.
Right. Cool.
But no, I think that's said really well.
New research from Acropolis coming soon.
Yeah.
Dan, I hate to interrupt the show, but is that an Acropolis type of logo on your hoodie right now?
It's it's an End the Fed hoodie.
There we
that's
go.
Oh, yeah. It was gifted to
That's
me by an individual. I posted him on my page, but lots of merch out there these days.
Nice. I'll have to grab one of those. That's really cool.
It's kind of a statement just to be aware. Like people look at you funny in public.
Oh yeah. Yeah, just like my Make Bitcoin Great Again hat that I occasionally wear. So one of our advisors, Sam Callahan, did a report with Lynn Alden a while back,
Oh, cool.
proving that Bitcoin is the great absorber of liquidity. And the general consensus right now in the Bitcoin community is that when the money printers are warming up again, and of course, Larry Lepard wrote the big print. He'll be on the show next week to discuss that more in depth.
Fantastic.
But what do you see on the horizon in terms of M2 money supply growth and quantitative easing that's surely coming our way?
I mean, if that quantitative easing that was suggested by, I have her name right here, the head of the Dallas Fed, Lori Logan, if what she said about the U.S. Federal Reserve resuming large-scale asset purchases to stabilize financial markets, I mean, we would be in business like beyond our wildest dreams. I'm not sure, like considering what Powell has said with regards to, waiting to see with increased inflation due to tariffs and being just very kind of reserved with easing monetary policy, not, making any sort of indication as to more aggressive rate cuts in the future. I don't see them. I don't know how soon the money printer will be turned on. But in terms of looking back to during COVID and now, I mean, we're sitting at a 4.25 to 4.5% Fed fund rate target, whereas before COVID in March of 2020, our federal funds rate target was about 1.5 to 1.75%. So interest rates were much, much lower. Inflation was already high. And then we got essentially a series of quantitative easing packages that just were unlimited, unstoppable. So that train, but the difference between where we're standing now and where we were standing then is there was no room to go. Once you issue $2.3 trillion spending package into the economy and interest rates are at zero, you can't loosen anymore. There's no runway. Whereas now we're sitting at 4.5% interest rate and quantitative tightening just starting to be eased. I mean, I think we have a lot of runway here. And so originally I was worried about kind of an early cycle peak with regards to Bitcoin, kind of this spring or something along those lines. And now I'm coming to realize I was totally wrong there. And I was wrong because we're sitting with so much more runway in terms of global liquidity over the next 9 to 12 months that this isn't the time to get scared about like a bear market yet. Bear markets are a result of those tightening monetary conditions, and there's no tightening to be done here. Inflation is lower than it's been in 4 years. Trueflation, I think, is giving a 1.4% annualized inflation reading. So like we're sitting in a really, really good spot with regards to like monetary policy only loosening from here forward.
What about, well, how does this play into it? The fact that the U.S. government is going to have to refinance something like $9 to $10 trillion worth of its debt over the next, I think, 10 months. And some of those numbers might be a little bit off, but that's generally directionally correct.
Yeah.
How does that issue over the next 10-month period lend itself to either quantitative easing, tightening, whatever you think might come within that period?
I mean, and we saw it with Liberation Day. I mean, the bond market did not react how Besant had wanted it to, right? We saw the 10-year and the 30-year yield jump as U.S. equities were crashing. And for anyone unfamiliar with how that works, and it took for me a little bit of time to understand how that works. So the yield is a function of the bond price, right? So if you have a bond you buy for $100 and the yield's 4.2%, you get $4.2 annually on that $100. And if more people are buying the bond, the price of the bond goes up, so the yield goes down, right? In the case of the U.S. equities market crashing as a result of Liberation Day and the tariffs, you would expect more people to go into bonds because they're a safer asset. That would drive the price of bonds up and the yields down, right? With the yields being down, you then are able to refinance. The U.S. government would, in theory, be able to refinance their debt for much cheaper, saving billions and billions of dollars. We didn't see that happen. U.S. equities markets were crashing. Bond yields were increasing, meaning someone was selling the bonds. And no one really knows exactly what the reason. Some people speculate, oh, these hedge funds were getting margin called, so they had to cover their margin by selling these bonds. Other speculative ideas are, well, 33% of U.S. treasuries are owned by foreign investors. And so those foreign investors may have been losing confidence in kind of the U.S. system. We saw the Swiss franc increase in price. We saw gold, go on a massive rally, and German bonds as well. So for those reasons, foreign investors may have been pulling out of bonds and moving into other assets. And I think it just goes to show you the capital markets aren't playing out exactly how the U.S. had planned. And so to your point, there may have to be some sort of monetary policy implemented to get these bond yields lower to roll over this debt, because obviously crashing the capital markets, crashing the equity markets isn't going to do it. So more direct measures will have to be implemented.
And one of those direct measures that has been talked about by Secretary of Treasury Besant is allowing banks to no longer have a limit to the percentage of treasuries that they hold on their balance sheet. Have you caught that as kind of something that he thinks is an easy win when it comes to creating more demand for treasuries?
Yeah, absolutely. I don't know too much of the specifics on that, so I'm not going to talk about it. But that seems like another strategy they're trying to implement. They seem desperately. It looks like they're turning over every leaf, trying to get these rates down to their best of their ability. And I mean, they caused a lot of pain with this Liberation Day, which I don't believe was for necessarily the good of Main Street. Right? There's this idea that they're fighting for Main Street. I mean, if you're running the U.S. government, and you have $10 trillion worth of debt to roll over, I mean, that's at the forefront of your mind.
And obviously, talks of stable coins is also really just a way of creating more demand for treasuries, the support that we're seeing there. So yeah,
Exactly.
getting more demand
Totally.
so getting more demand into treasuries is kind of an imperative over the next 10 months. So we'll see what levers they pull. They're always pretty creative. But one thing that happened during this Trump tariff terror, whatever you want to call this last couple of weeks, is, and I won't say that it happened, but I will say that I think we saw glimmers of Bitcoin decoupling from
Absolutely.
its correlation to the stock market. So, as you said, typically when stocks sell off, investors flee into treasuries to capture that risk-free rate. And we didn't see them. We saw treasuries trading down, we saw stocks trading down, but we saw Bitcoin stable or up in some cases. And so I'm curious, have we begun the decoupling? Was this a real sign of decoupling that Wall Street took notice of? And, long term, what's it going to take to actually sufficiently decouple and for Wall Street to see Bitcoin as a non-correlated asset?
Yeah, that's a question I've been struggling with a lot too. It's like, okay, and I think Larry Lepard has a good theory on it, and I know a lot of the big time just kind of melt up people would advocate, well, Bitcoin could perform like Bitcoin's going to perform, but the Nasdaq will melt up with it. So there may not necessarily be a decoupling in the sense that if both perform, then they will be correlated. I think we did see that sort of decoupling or adoption floor. I think there's some sort of adoption floor set at kind of the lows we've been bouncing off of, and I think that provides a lot of confidence because this is as we Bitcoiners like to say, I think there's two parts of the cake, right? There's the speculative price, which sits on top of the long-term holder demand price, and I think we've been bouncing up against that. And so long as there's that real demand for an intrinsic store of value, which Bitcoin is, I do believe it will decouple in times of extreme stress on the equity markets. And we saw that a bit. I know I've talked to a lot of different like crypto fund people in recent days, and they've all been mentioning, yeah, I think Bitcoin, they're all kind of flocking back to Bitcoin as they see it hitting its floor, right? All these other coins, all these other projects, all this nonsense. There is no floor. There is no floor. But Bitcoin has clearly demonstrated it is kind of a safe haven, but is still behaving as a leveraged QQQ and a vacuum for money printing. So it's just such a weird asset. And to your point, I don't know what decoupling will look like, but I do think finding a bottom for now is a great sign of decoupling.
I guess one last piece on that is some would argue Bitcoin is a global asset. There is no transportation across border costs, so it's unaffected by tariffs. But obviously, a trade war is going to affect every asset to some degree. So how do you think about, Bitcoin as unaffected by tariffs?
You can be idyllic and say like, well, Bitcoin is actually the one asset you'd want to own during a worldwide trade war and during this kind of period of nationalization and national capitalism. But it's tough. Like when there's a Chinese hedge fund trading with $10 billion worth of leverage overnight, trying to get an edge on the QQQ futures, it's difficult for the asset right now to trade, uncorrelated with Bitcoin, with the Qs or with any sort of other market. So I think in the long run, it's going to continue to decouple, but in the short run, that kind of volatility will continue to be there. But in terms of tariffs, yeah, you're totally right. Like I love Michael Saylor's quotes about, there's no tariffs on Bitcoin. And it really did hit me. It's like, okay, you got all these companies with all of this tariff risk, whether it be the Mag 7 or any of these other companies. And I think that's been a gripe for a lot of investors saying, MicroStrategy doesn't sell anything. They don't have a product. And, when there's a worldwide trade war, I mean, you don't really want to be selling or buying anything. So I thought that was kind of ironic.
So we're going to transition into some discussion on Bitcoin equity income strategies and things along those lines. So before we go into it, can you briefly explain covered calls to the audience to set up the discussion?
Sure. Yeah. Well, these income products, I think, are more and more interesting to people who are, kind of sick of this chop and just want to make money. And I totally get that. And so a covered call a call option gives you the right to purchase an underlying asset at a specific price before or on a specific date. So for example, if MicroStrategy is trading at $300 and I buy a May 16th call option for $400, if MicroStrategy moves above that price, maybe let's say it's trading at $500 before then, I can buy MicroStrategy at $400 per share. So that's what an option contract gives you. They're very difficult to price because there's all sorts of moving components, but that's exactly what it does. And so in terms of options trading, you can either buy that call option or you can sell that call option. So if I were to sell someone else a call option, so let's say MicroStrategy is trading at $300 a share, and I were to sell someone else a call option, which is the right to purchase my MicroStrategy shares at 400 before a certain date. So I have 100 shares of MicroStrategy. I then sell someone a contract. I write up and sell someone a contract to buy those shares at 400 at or before a specific date in the future. And I receive a cash premium, a risk premium for that contract, for giving someone else that right. That's what selling covered calls is, right? And so a lot of people will sell a weekly covered call, meaning like on a Monday, they'll sell someone else the right to purchase their shares at a specific price before that Friday. And they'll receive a small risk premium for that. So you're essentially limiting upside, or you're selling someone else the upside on your equity. That's what a covered call would be, you can think of. And now, since MicroStrategy and Bitcoin is such a volatile asset, the volatility really, it gives you a high premium on those call options, right? If someone's going to buy from you the right to purchase your shares at a specific price that is above the current price, they need to have some sort of chance or probability of it hitting that price before the expiration date. And that probability can be kind of calculated in part by the volatility. So if the stock's bouncing around all over the place, then there's a higher likelihood it finishes in the money or at above that strike price. So there's high options premiums. There's high premiums for these calls. Now, there's all these ETFs that use a weird workaround based on the Investment Company Act of 1940, where they hold a combination of, well, I don't want to start there. So that's what a covered call is, right? You've got the equity, you can sell those calls, it generates income. You're essentially selling upside. That's something any shareholder can do with more than 100 shares of MicroStrategy or more than 100 shares of IBIT, right? You can just do that. Then around that, there have been multiple funds that have popped up. MSTY, for example, or Bitwise's new MSTR. And what they do is they have a team that sells these calls for you. And what you do is you own this ETF and it kicks back a dividend by selling these calls. But if you look at the performance of MSTY, for example, relative to MSTR, that fund has underperformed on the upside, right? That's kind of the nature of a covered call, is you will sell some upside, but during sidewards and down markets, you in theory will outperform, but it's all taxed and this, that, and the next thing. The important thing to understand with these income funds is that there's a rule stating that any ETF, there's a diversification rule. Again, it comes from the Investment Company Act of 1940, and it states that no more than 5% of a fund's total assets can be in a single security issued by a single issuer, right? And you can't have more than 10% in outstanding voting securities. And this only applies, however, to 75% of the fund. So it's kind of really weird here, but the way they work around this is both MSTY and IMSTR own a majority cash position. And then they buy a call option, a long call option with about 10% of the fund. And that long call option acts like an equity, right? You're taking on time decay, but it acts like an equity against which they can sell the covered call. So instead of they can't own 90% of the fund in MSTR shares and then sell covered calls against it. Instead, they own 80% in cash, 20% in long calls, and then use the long calls to sell upside against. And that's how you get this kind of dividend payment in these income funds. Do you guys use them all? What are your thoughts before I mention mine?
Yeah, Chase is, like I said earlier, he's deeper into it than I am, so I'm sure he's doing something like this.
Yeah, I'm doing some things. I don't know. I'm still researching, but I think an income strategy can make you a better long-term hodler. And I think a lot of Bitcoiners are coming to terms with that. I think the simple Bitcoiner view is, okay, I'll just hold as long as I can, live as cheap as I can, and then when the wife and the baby are finally starving and have had enough with my hodling antics, I'll start clipping Bitcoin month to month. But I would like to hold all of my Bitcoin. So I am looking at these strategies, engaged with some. I'm not going to be endorsing any of them yet, but one question that we had as kind of a follow-up to that was, you mentioned how covered calls can perform well in a sideways, choppy bear market, for example. So if somebody was purely holding MSTY, which is the better known covered call strategy, income dividend paying ETF on top of MSTR, should an MSTY only shareholder be rooting for Bitcoin and MSTR to go nuts because they're going to make more money on their share price and the calls within the MSTY fund, or should they actually be rooting for just a choppy sideways bear market?
Really, that's a really, really good distinction and question. And ideally, it's based on what calls the fund sells. So if the fund's really good, they should be adapting to markets and able to, achieve the highest yield in any market condition. But no one knows where the market's going to go definitively in the short term. Typically, with the way these funds are structured, is they'll sell 10 to 20% out of the money calls for 1 to 2 weeks to expiration, typically 2 weeks to expiration. For example, let's say MicroStrategy opened at 310 yesterday morning. 20% above that is roughly 370, but they sold 350s, I think. So on that Monday, they would probably sell around a 350 call for next Friday, right? So the ideal behavior of the underlying, based on that strategy, would for MSTR to finish at 349 next Friday. So if you on Monday you sell the call for 350 for 2 Fridays from now, you'd want MSTR to finish at 349. So that call expires worthless. You get the entirety of the premium, but you also had the capital appreciation on the way up. So I think the ideal scenario for any of these funds is gradual, slow up movements. But any sort of jarring, quick movements means you lose relative value compared to the underlying because you've limited your upside in the short term. But any sort of sidewards and down movements, you are losing value because the long calls they own, which are supposed to replicate a sort of share position, is losing value, right? If you own the shares, you don't want them to really go sideways or down. So down markets are the worst regardless, especially because there's decay associated with the way they run their strategies. So
we're gonna get into we'll get into the NAV decay. So maybe one last thing on that then. We know that MSTR is levering up again. They're kind of just a 2 billion or so, a billion away from tapping the 21 billion ATM issuance, and so they're going to be taking on more of the levered side of the vehicles. To your point that you just said, then wouldn't that make MSTR's price more volatile to the upside and therefore give MSTY a more challenging time at not having their strike prices called from them, and therefore MSTY is maybe theoretically going to underperform while MSTR is levered up? Because my very cursory understanding was that MSTY is monetizing MSTR's volatility, and so MSTR levering back up would ultimately be good for MSTY. But you're making it sound like maybe that's going to get MSTY into some trouble.
Yeah, and it's so difficult, right? Because if your benchmark is spot MSTR, which in the case of a lot of MSTY holders it is, it's kind of two sides of a coin. If MSTR pulls a 3x and MSTY gives you 110% dividend yield during that period of time, a typical investor would be like, that's fantastic. That is absolutely great. And MSTY, the spot holding, increases by 50%. But if you're comparing that to spot MSTR, I mean, you got 100% dividend yield and 50% or 100% increase in your principal. That's still significantly underperforming the 300% increase in the spot. So to your point, if you think there's going to be volatility to the upside as a result of some sort of levering up in the near term, which I do believe is continuing to happen, then you may be sad holding MSTY relative to your spot MSTR. However, relative to any other asset, your MSTY will perform even better because the options premiums will be higher. So it's how you look at it.
Okay, so let's get into NAV erosion. The dreaded NAV erosion. A lot of talk about this in the Bitcoin Twitter circles. Um, and maybe you'll have to explain NAV erosion to some degree to answer the question, so feel free to provide whatever context is necessary. But does NAV erosion in something like an MSTY matter if the expectation is that MSTR, the underlying, is growing at 100% a year for the next decade? Does NAV erosion is it even relevant so long as the underlying is performing the way that MSTY holders probably expect MSTR to perform?
Yeah, and I don't have the exact numbers on the different ways in which the net asset value erodes. So just for people listening, like NAV erosion means like you're losing your principal. And so your principal is your ownership of these MSTY shares. Are they decreasing in value over time? And so there are different ways they return capital in the form of the dividends, which are there's two distinctions: return of capital and return on capital. So historically, as an MSTY holder, you haven't just been returned the premiums received by selling the calls. You've also been returned some of the principal and capital that is introduced into the fund by new holders. That's a bit sketchy, right? That is kind of the definition of a Ponzi scheme. Yeah. But you got to be careful there, and you have to understand how much of the principal is being returned to you. You have to track all of their trades and the net profit. I don't do that. You could probably write an algorithm to do it well, but you just have to look at that. So if you look at the 5-year TSLY chart, so that's the Tesla options income chart, there's extreme erosion in terms of the value of the TSLY shares. Now, Tesla traded down and sideways. That may not be a problem if MSTR continues to trade up. But the NAV erosion that I worry about, and that is ever present in that sort of strategy, is the time decay. So the way that fund is set up is such that they don't own the underlying, right? There's no time risk with the underlying if you're holding spot MSTR. But if you're holding a synthetic position, so a synthetic position, which MSTY does a lot, is a long call paired with a short put, with a long put. So it creates the movement of the underlying shares, but it's synthetic. And as you approach that expiration date, you're losing value, right? There's time decay associated with both those options, and you don't actually own anything. So there is small amounts of time decay that are compensated by the time decay you receive by selling the premiums. So you own options that are decaying with time, but you're selling options that are awarding you a premium that offsets that decay, and then they roll those options out. So you're essentially fighting the clock with these sorts of strategies, and it's just something to think about. And if you're proficient in selling calls, my recommendation for anyone is just do it on your own. I know it's scary and it's nice to not have to worry about it, but really owning the underlying shares and then selling the calls on those is the preferred strategy, in my opinion, because you don't take on that time decay with the underlying. I'm going to get a ton of MSTY bulls saying that's not the case. Then the next thing. But in theory, like in practice, maybe MSTY is so good with the strikes they choose that they can outperform anything you decide to do. That's totally possible. You have to look at every one of their trades. But from like a kind of philosophical or from a first principles idea, you'd want to hold an underlying that doesn't decay with time while selling optionality on that does decay with time.
So when it comes to an individual running their own covered call strategy, obviously that takes a certain level of commitment to tracking markets. It takes a certain level of familiarity with the instruments. But let's take a parent or a grandparent that just wants passive income, maybe has Bitcoiners in their family that are telling them, hey, MSTY is an interesting way. It's better than annuities. It's better than treasury bills for you to earn passive income. How should somebody in that case think about the long term of NAV erosion? And is NAV erosion one of these things where it's like a super slow moving train where you can kind of see it coming from a mile away and jump out of the way when necessary? Or is it something that when it happens, it's going to happen fast?
That's a great point. It happens slowly, right? And the beautiful thing about MSTYs, it's been only about 0.8% correlated on the downside with MSTR. So you have had a bit of downside protection, but it's difficult to look at MSTY as a long-term hold because of both the NAV erosion and the fact that you don't own any equity. So I think in the short term, absolutely. The NAV erosion, we give it a lot of time. I give it a lot of airtime, but it doesn't matter. Like, you're buying this thing to generate income, and it's a part of a larger portfolio, and that's absolutely fine, right? That's totally fine. But you can't buy this thing with the intent of, you can't buy it and think it'll still be around in 5 years, spitting off 10x the amount of income. That, a lot of people will be like, oh, in 5 years, this MSTY, like, I'm getting a 10%, or I'm getting, $10,000 a month from my MSTY. In 5 years, if MSTR keeps compounding at this rate, I'm going to be making like $1 million a month from MSTY. It's like, okay, that's not how these funds work, right? They're not going to compound. They return all the dividends to you, which then you can put back in the MSTY, but there will be compounded net asset value erosion over time, regardless if MSTR goes up. So you can't use the MSTR compound rate you assume on your MSTY, for example. That's just a cautionary note I say. But I think if you were to play it for a year or two, you could be fairly confident that NAV erosion won't like wreck you. Like, it's not going to go to, I mean, it could go to zero, but anything could go to zero. So, but the NAV erosion won't do that.
What do you expect to see from these newer income funds like Bitwise's iMist and other income funds they're going to emerge to help monetize MSTR's volatility? Is this something that there's going to be a lot of competitors in this market, or is it sort of a winner take all or early bird gets the worm sort of thing?
I mean, I think there'll be a lot of competitors. Like, Bitwise probably has a better marketing team right now for Bitcoiners, with Jeff Park heading that charge. And that's all people want, is just a trust thing, because you're flying blind. Like, anyone who buys this isn't going to track the trades. They don't know how the team is necessarily going to manage the fund. So you have to have a lot of faith in the management team. So I think the team with the best marketing and the best reputation will win. And I see Bitwise as having that as of now. We'll see how that plays out moving forward. I think there'll be a lot of them continuing to pop up. But the Yield Max has so much track record with its other covered call funds that maybe it remains the market leader. I'm not sure.
Mason, maybe one last question just before you get to the final question here. Is this like the one vehicle that MSTR will never be allowed to introduce themselves? Because it's hard to imagine them introducing a covered call strategy on their own stock price. So is this like the one area of securitizing Bitcoin and income strategies on Bitcoin's volatility that MSTR just has to kind of let somebody else take?
Yeah, you're totally right. They'll never be able to do this. They can't really sell securities around their own derivatives market. But the funniest comparison are these convertible notes. Like, what they do when they sell a convertible note is essentially sell a covered call against their Bitcoin holdings.
That's right.
So
That's
like
true.
Holding MSTR in a sense is like holding MSTY on MSTR, but that's like a whole different second layer thing. It's just interesting how they're all kind of doing the same thing. Everyone's just trying to get a premium for this volatility.
All right, now for the fun one, the cherry on top. Dan, we're getting all the MSTR True North guys on record. What's your Bitcoin and MSTR price prediction for the end of 2025?
My Bitcoin predictions, I think we'll tap somewhere over 200. I don't know what it will be, but I think we'll tap something above 200. Then MSTR, I think we'll see north of 1,000. But I don't think we'll see more than 3,000. And I think it's very unlikely we see north of like 2,200.
All right, well, let's go ahead and wrap here. I think now is a good time. This is a great second episode having you on the show, and want to give the folks a place to follow you. But before they do, we've really appreciated the increased engagement, likes, and comments we've been receiving on the last few episodes. So please do that for this one. Follow, subscribe, like, do everything you got to do to help us keep that momentum going. And then Dan, tell the folks where they can follow you as well.
Awesome. Thanks, guys. Yeah, I love your content these days, and really excited about your business starting to take off here. I'm just at Hillery, HILLERY_Dan on Twitter. That's where you see all my my nonsense, and you can follow along.
Sounds good. Cheers, guys.
Awesome.
Cheers,
Thanks,
Dan.
Dan.
Thanks.
Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit AcropolisTreasury.com to learn more or to get in touch with our team.